The following content is intended solely for informational purposes. The views expressed by hosts and guests are their own and do not necessarily represent those of Alea Research, its affiliates, or any organizations with which participants are associated. Nothing discussed should be construed as financial, legal, or investment advice. Viewers are encouraged to conduct their own analysis and consult professional advisors before making investment decisions. Welcome to a new Market Cap episode. Market caps, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host, Stefano, Director Institutional Services at Alea Research, and with me I have Evgenvy, founder at Re7 Capital. Re7 Capital oversees around $1 billion in assets with 5 years of consistent performance. Their team brings institutional experience from UBS, BlackRock, Goldman Sachs, and Fidelity Digital Assets, combining proven risk management with DeFi innovation. Evgeny, welcome to the show. Good to finally have you with us.
Thank you, Stefan. It's a pleasure to be here.
Absolutely. Let's get into it, learn a little bit more about Re7 Capital, all the different things that you do. But I'd like to start with the person. So I'd like to ask if you can tell us a little bit about your background in the traditional markets at places such as Deutsche and the like, and how that led to Re7 Capital eventually.
Yeah, with pleasure. I started my journey, like many others, in TradFi. My first job was in a hedge fund doing equity long-short research. Having done that for a couple of years, I then joined the banking world, where I spent way too many years across UBS and Deutsche Bank on the investment side, the portfolio management side. And that gives you, a very well-rounded understanding of a variety of asset classes. And then you have to kind of pick whether you want to go deep into the existing ones or explore the new ones. So about 10 years ago, I started learning about the blockchain world, the crypto world. It was much easier at the time because all you had to do was then, a meetup a week. There was much less information to consume. And shortly thereafter, I left banking, joined an enterprise blockchain startup doing supply chain traceability back in the day when those use cases were, the meta.
Mm-hmm.
And a few years down the line, when I saw DeFi, I realized that's finally something I'm willing to bet my career on, and ventured to set up Re7 to become an asset management firm in the DeFi space.
That's amazing. That's quite a extensive background. Interesting choice to make that switch, even after all the preparation and good research and making sure you made the right move. What specifically led you to make that bet?
On DeFi specifically?
Yeah, on DeFi, on blockchain, entering or exiting the traditional markets rather.
Well, I think, it's very easy to come up with an intellectual answer that someone sees, the future in the new technology and what have you. But the reality is that I think I saw that, there is a possibility that something new might emerge. I didn't fully understand, obviously, what the potential might look like. And it was very clear that, if someone is willing to take a lot of personal risk and a lot of career risk, then you have a chance of being at the forefront of something that's new, rather than trying to, crawl up your way in a market which is extremely, frankly, where people don't need you because there's more than enough people doing those jobs. So it's a journey of trying to create something out of nothing rather than follow a more typical path. And it was quite scary at first, obviously. So it was a very gradual journey. And frankly, it was much easier to go into an enterprise blockchain world because, it's a company, you build software, you sell software. It's, it's a real business, so to speak.
Mm-hmm.
And jumping into DeFi became possible once I saw the first DeFi apps, when, it became clear that all the use cases of DeFi that we know and love today, became possible in 2019-ish, roughly. At least they were widely used or started to get widely used. And then became clear that this is an opportunity to basically reimagine and reinvent finance. Ironically, the more DeFi reinvents itself, the closer it resembles TradFi, but that's a whole different story.
Yeah, maybe we can touch on that a little bit later towards the end. It could be a interesting way to close the circle. I can definitely relate to what you're saying. Um, it's an adventure stepping into this space. You're pioneering, right? Similarly, I was a market analyst in fast moving consumer goods, very conventional market. And I realized like this, if you really want to make some moves, you got to go where things are still moving and not everything is so, entrenched and there's a established status quo, right? So I can definitely relate to that. You did it by starting Re7 Capital eventually. Yeah, let's start getting into that a little bit more. Um, Early days, how what was the vision? Like what was the gap, I guess, you saw that made you decide to jump in there? And yeah, what did you set out to do?
Well, prior to the, let's call it the on-chain DeFi economy, using very glamorous wording. Prior to that, what could someone have done in crypto on the investment side, right? You could have run a venture fund, you could have made liquid investments, and you could have been doing high frequency kind of quant trading strategies. Um, Lots of them very lucrative, very profitable, very interesting, so on and so forth. But these are all things that have existed in TradFi before, right?
Hmm.
So now that one of the things Re7 does is we run a long only strategy investing in tokens. And it reminds me a lot of my first job when I was an equity analyst covering stocks and, going to conferences, trying to meet a CEO and get some more information and knowledge about the company. So these were, the same kind of same, but same, where, it's a different sector, but it's the same skill set, it's the same expertise. But when I saw, the whole kind of DeFi meta and yield opportunities on chain, it felt pretty interesting to me because it was something truly new and truly different.
Mm.
And it's very easy to get cynical and skeptical about how all of that works, or at least used to work. But the reality is that never before in the history of traditional finance could you have taken a risk return profile where you may be earning, 20% plus or more or less, but let's say 20% plus on stable coins, as in, let's say, dollars ish. And in exchange, you're taking a risk of a hack, smart contract risk. That
Hmm.
risk return structure just has never been possible. So as I was playing in the space personally, I was like, well, wouldn't it be pretty cool to run it as an investment strategy where you could be making, 20, 30% a year on stable coins. And potentially, if you can manage your risk very well, you can actually package it up almost like a fixed income strategy where if you think about it, if you buy a bond, um, or just give out a loan to make it even easier, then you get paid, let's say, every block, every second, metaphorically speaking. And then maybe a year from now, there's a default. Now, how is a DeFi platform different? You put your stablecoin somewhere, you earn every second, and then one day it may get hacked. So actually, the nature of the risk return profile is very, very similar to fixed income, but the yields are disproportionately higher.
Hmm.
So I thought, okay, well, I would love to do something on the investment side. I would like to do something that has never been done before, something that's cool and interesting and scary and unusual. Um, and if I could come up with a risk management framework as to how to assess that smart contract risk, and back in the day, it wasn't even a smart contract risk; it was a rug risk, basically. Uh, it wasn't that sophisticated back then. Then you have a real investment strategy that has never existed in the history of finance, which is pretty cool. And then, more importantly, um, you know, there were already a lot of venture funds back in the day, and I kind of didn't really feel the need to try and compete with those who are already doing their job very, very well. And obviously, on the liquid side, if you the challenge, as we all know, with tokens is extreme volatility. So I thought if I'm trying to build a sustainable business, then it has to be crypto cycle resistant, right? It can't be I can't wake up and then my portfolio and my business is down 90% overnight. So
Sweden.
that well, yeah,
Yes.
that we'll talk about that, I'm sure. Uh, So the idea was, okay, well, it's kind of best of both worlds, where if you run a fund that's market neutral, then you can be cycle resistant to a certain extent as a
Yeah.
firm, and which means that when everything is, there's blood on the streets, you don't need to fire people. You can actually hire people and hopefully grow into that, which is what we did. But even more importantly, you can run an investment strategy that's unusual, and there's excitement of being some of the first people in the world to run it institutionally.
Definitely. I was gonna say you were probably one of the first to spot this opportunity. Together with a couple others, you're really like forerunners in this space that now we call like vaultification or vault strategies or the vault meta, whatever people want to call it, right? But it sounds like when you started out, there wasn't even really like a name for it. It was just a very innovative strategy that you saw and decided to run with it. Um, Taking it to the present day, as RE7, you offer a couple solutions, right?
Right.
So that's DeFi yields, liquid investments, and labs, which is basically your R&D and risk analysis arm. I guess some of these already map to some of the things you spoke about earlier just now. But can you maybe explain these three and how they complement each other?
Yeah, we started with this idea that we want to be, we want to have a foundational investment strategy, investment product that's market neutral, that's hopefully delivering great risk return, and it's very interesting to run. And at the core of that, you're basically a provider of liquidity into DeFi,
Yeah.
right? So our job is to provide liquidity, and sometimes we provide it to very, very large and very established platforms who, frankly, could do very well even if we didn't exist. And we do it to the smaller ones where we become a key partner, helping them to grow and to succeed. And that's not too different what traditional banks do, right? They channel liquidity very, very metaphorically, very high level. At
Mhm.
least banks in their original function, their
Mhm.
role is to provide liquidity into the economy, right? And if you do that well, you become positioned at the heart of the economy. So if you are channeling liquidity, probably you have or at least you should have a good understanding of risk. You probably should have the right relationships, because code is code, but people are people, and people are the ones who write the code. So we believe in both the old school and the new world things. You have a lot of tooling and hopefully a lot of knowledge and a very broad overview of the whole market. So with that, with some incremental effort, you can now treat these DeFi platforms not just as a place where you can park your liquidity, but also as a business where maybe you can make an investment, and maybe they're mature enough for you to make an investment on the liquid side or maybe on the venture side. And eventually, I believe that um, no investment strategy can exist in a vacuum, and no investment strategy is great um, you know, every second of every day of every year, which means that unless you want to remain a product firm where you like, I like that product, therefore I go to this firm, you might want to become a place where you can have strategic relationships with your partners and your investors. And then you need to be able to offer investment strategies across the whole risk return curve. So being trained up in the bank, that was a very logical thing to evolve into. So fast forward to where we are today. Apart from running our stablecoin yield fund, which is our oldest product, we have rolled out a Bitcoin yield strategy, a long
Yeah.
only investment strategy, a venture investment strategy. All of them are highly, highly specialized with a very clear reason for their existence. We believe that you have to be specialized. It's very hard to be a generalist. There are too many good people who are generalists already, and they run a lot of capital. So you need to be different, and you need to be very nimble. And then these vault opportunities came about where we could have extended our infrastructure to become an operator of this vault. So we launched Re7 Labs, which is our sister company. We grew the team pretty rapidly. And now, apart from running, our investment strategies that are, packaged through funds, we have, all the vaults, and we're one of the main players in that category as well. Which is the way how I kind of package it in my mind. If you think about BlackRock or a business like a BlackRock, they have a lot of very vanilla products that are very easily available, basically 24/7, which is an robo advisory style solutions, which is a bit like vaults, and they run hedge funds as well. And then depending on people's preferences for liquidity in the DeFi space, are they giving up custody? Are they not giving up custody and everything else? People can choose whether they want, a vault or a fund.
Okay, that makes sense. And this comes back to what you mentioned earlier, how this space is resembling traditional markets more and more. You mentioned the banks and the different, uh, how they structure their products and the different offerings that they make to different clients. And it's starting to resemble that as well. Um, it's very interesting. So with that, you also touched on the risks and different risk profiles. I think to mitigate those risks, you developed a few ratings and indices. Can you briefly elaborate on those? Can you explain what they measure and how they're used in your products?
Yeah, absolutely. So, when it comes to making a venture investment or a directional investment into buy and hold a token, the risk management logic is very straightforward, right? I mean, if it's a venture thing, you assume it goes to zero, and hopefully it doesn't. If you're buying a token, you can look at VAR and a lot of other things to measure its vol. But if you're putting money into a DeFi platform to earn, let's say, 20% a year, then, what's your risk? How do you quantify that risk?
Mm,
And are you doing it because the founder is famous? Are you doing it because it has a lot of TVL? So what is your, methodology? And in my opinion, the only way, like, we can all play as degens and, get lucky or get unlucky. But if you're doing it every single day consistently for other people, you need to have a very clear framework. And that's what we developed back in the day, where we, inspired by this fixed income metaphor, we're like, okay, if I come to you and I ask you for $100 loan, and I tell you, well, listen, I will either pay you 110 at the end of the year, or I'm going to pay you nothing. You'll say, well, that's not a great risk return profile, right? I can lose 100 to make 10.
mm,
Uh, but in practice, you wouldn't just lend to me. You would lend to a million other people. And you would also know that if I default on my loan, then that's not the end of the journey, because maybe there is some recovery, right, that you can achieve.
mhm.
So with that, you have a risk rating system where you analyze counterparties through, AAA, triple triple C, and you create a very diversified base of exposure. So that's pretty much what we've done. So we've developed our own framework as to how we analyze smart contract risk. Every single DeFi platform that we touch, we run through an insane amount of different scenarios, modeled risks, and other things. And at the end of that journey, that platform gets a score. It can be a triple A, triple B, triple C, or whatever else in between, and that impacts the risk limits that we assign to that specific platform. So at any point in time, we're providing liquidity to dozens and dozens and dozens of platforms, and our risk metric of default rate, so to speak, which is again using traditional financial methodology, is 20x lower than the average for the industry. So then, if you deploy your capital into every single DeFi platform in existence, just like you would in an ETF or a bond index,
Right.
you lose X per year. And it started with double digits back in the DeFi summer days, and now it's obviously low single digits as the
Okay.
average loss rate from DeFi hacks. So the industry itself has become much, much safer. But we have also been able to deliver metrics which are materially, materially below the average for the sector, which means that the process works.
That's great. That's great news actually to hear that. Cause sometimes you just don't know, like, are we in a better place than before? But we are making strides. That's good to know. It's also, yeah, you're gathering very interesting information in that sense, kind of exclusive data that not a lot of people have access to, or at least are not able to derive at for themselves either. Have you, probably not. You clearly use this for internal purposes
Mhm.
exclusive. Is there a, I guess in your case, there's not really a world where it makes sense for you guys to open up that methodology and start providing ratings for the industry at large. But this is something, or maybe you do, but this is maybe something we do see again in traditional markets. You have Moody's, etc.,
Mhm.
providing all these ratings.
We thought about it. Back in the day, we decided not to do it just because we didn't have any time or capacity.
Mm.
That's a whole different business. But the most important bit is there is a reason why, even though Moody's and S&P exist, on the buy side, investment firms, they still do their own research.
Yeah.
So if we were to migrate and become a ratings agency, then it's hard, right? Because the way how a rating agency views risk and how a capital allocator views risk is different. And obviously, there's also conflict of interest, because why would you pay us if you know we're going to give you a triple C, so to speak? So there is just, it's a very different business. It's a very different model with a very different set of incentives, because we are incentivized. And that's a very important thing, I think, in the philosophical difference. So a lot of people in crypto became successful because they were taking a lot of risk, and they got something right. And that comes from this, venture methodology, right? Doing an angel ticket where you never expect to see your money again, and suddenly something is a multi-billion-dollar outcome, or like whatever. And so there's this culture of taking risk and saying, well, what if this works? Which is how a venture allocator, venture investor should think, or anyone who basically say, okay, well, I don't care if I lose money on this. I just want to get one thing right. When it comes to running yield style strategies, you exist in the opposite world,
Hmm.
where if my job is to deliver, 10, 15, 20, 25% a year, I'd better not lose money, right? Because if I find an amazing platform that I find extremely exciting, and if I'm right, I'm going to get 20%, gradually over the course of the year. And if
Yep.
I'm wrong, it's going to get hacked in a second, and I'm going to lose everything. So we are primarily in the business, when it comes to our yield strategies, in the business of, um, not necessarily avoiding risk, but we are okay to sit something out,
Yep.
because it's okay to be conservative, where your job first and foremost is not to lose money. When
Yep.
it comes to our venture fund, for example, that we run, it's a very different mindset, right?
Yeah.
We're glad to lose money on investments for as long as we don't miss out on something that's truly transformative.
Yep.
Combining these different philosophies, I think, is very important, and goes back to the risk rating thing, because maybe as an agency, you would say that something is, double A, but we'll say as an allocated, well, it kind of is like double A, but we don't want to allocate any capital.
Right. It's like put money where your mouth is. Can
Exactly.
you name it changes things. Yes, it changes things. Um and yeah, I get what you're saying about the different philosophies, right? In venture, you're much more concerned about getting exposure to the winners,
Mhm.
whereas here the game is much more about eliminating the risk of blow up and shielding yourself from the losers, basically.
Exactly.
It's a
Exactly.
very different game. I'm that brings up an interesting question. That makes me imagine that the people running your venture arm and the yield strategies arms are must be very different teams with very different capabilities and maybe even personalities. Although I can imagine there might be some people who sit on both teams and sit in the middle and can actually bridge that gap, which is like a huge accomplishment. But maybe touch a little bit on that. I'm curious about that.
Yeah, well, firstly, given it's DeFi, even if you're on the kind of conservative side, you still have to be a little bit crazy, because it's still DeFi.
Sure.
But yeah, I mean, we believe in clear role ownership, right? So I don't think one person can be a full-time portfolio manager of more than one thing,
Mm,
especially different. So what we've tried to together is a group of people with widely different set of experiences, uh, porf- portfolio behavior and how they think about risk. And what's great is seeing this expertise come together, because then someone is looking at a venture thing or a liquid token investment, and then the more conservative DeFi analyst or DeFi portfolio manager can weigh in with an opinion. Or let's say there's an opportunity to get some yield, but the upside isn't very clear because it's a function of a token price. Well, someone else can chime in and provide guidance. So any great company is built by having a great set of people, and these people need to bring very, very different set of skills.
Absolutely. You mentioned this very interesting word, portfolio behavior. Can you unpack what you mean by that?
Sure. Well, I sincerely believe that portfolio management styles, unless you're fully quant, obviously, is a reflection of your, personality, right?
Mm.
So, um, no, someone is all about risk mitigation. Someone else is all about, going, going at it, taking very high risk, swinging for the fences, kind of
Yeah.
thing. Um, and someone is physically suffering when they're seeing market volatility, and
Yeah.
someone else is inspired and encouraged by that.
Right.
And people tend to gravitate to an investment style that fits their personality, and that drives them towards a specific type of investment strategy.
That makes sense. That's very interesting. That must and that also touches on things like hiring strategies and even interview techniques, right? Like how do you uncover these these personalities and these traits, and how do you even find the right people for managing like the right fund? I guess that's very interesting.
Well, I
Um,
wish I had a very scientific answer. It's more of a gut feeling, like a lot of portfolio decisions often are, unless you're relying on very, very hard data. But the great thing about crypto is that it's still realistically a very, very, very small industry in terms of number of people.
mhm.
And uh, if someone has been around for a while and they have good experience and they have behaved like a normal human being, then the odds are you'll get to know them eventually, because the network of those people is very, very small. So if you've also been around long enough, then eventually you meet some people and you build good relationships, and one day things just align
Yeah.
when things are just right. So we've been in a situation where, like, one of our strategies, we launched specifically because one individual and myself decided to partner up and do it together. So it's very, very hard to find the right kind of portfolio management talent in the crypto space, because it's still not a very structured industry, right? So the way how firm number one runs a market neutral fund may be extremely different to how a second firm does it. And the same goes for venture funds and for everything else. So you have to, investment philosophies need to resonate very, very deeply, I feel.
Right. It makes it harder for individuals to cross over from one firm to the other because the methodology and the procedures might be so wildly different, right? That's what you're saying.
Well, unless they're doing something very, very similar, right?
Sure.
So the very, very large venture firm and you're going to another very, very large venture firm, then I would argue probably it's comparable.
Okay.
But we're a firm that does things in a weird and different way, or at least we try to, because that's how we like to do things. So by definition, we feel if we're doing the same thing as everyone else, we're not doing a good job.
Absolutely. How are you going to differentiate? Um, and it totally that what you said about this industry being so small, that really resonates. We talk. I talk about that with Fu, our CEO, all the time about especially at the top, the the industry is so small. At the end of the day, everyone will know each other pretty soon if you stick around long enough.
Mhm.
And yeah, that's really in favor of the people who let's say, like good actors, right? They
Hmm.
stick around and build their reputation. So it pays to be early. Um, Getting a little bit more into what you just said about how you guys like to differentiate and maybe do things a little bit weird. What are some of the ways you think that Re7 Capital is a little bit weird, or where it's most obvious that you guys do things differently from what most others do in your sector?
It's a good question. Um, we just like doing things that may seem a little bit contrarian, right? So um, right now there are quite a few people in the kind of DeFi yield world. 5 years ago, it probably wasn't the most obvious choice for most people to go and run a DeFi yield investment firm. Then we have a venture fund, for example, that is extremely niche and only does consumer and social.
Yeah, yeah, yeah.
So there are some great investors in our industry who've made some great things happen in that category, but it's not common to have a venture fund that only does that in a very specific category, and a venture fund that chose to be quite small, to be extremely early, taking pretty crazy risks, pursuing some truly asymmetric outcomes if they materialize. And even in our fund where we do liquid tokens, we still try to go beyond what the consensus things are and kind of swing for the fences. And sometimes it works very well. Sometimes you take a hit, but you just keep going. And with everything we do, we just try to be to do something that is interesting rather than repetitive.
That makes sense. I think usually if you follow your interest and your curiosity, you arrive at unique solutions, right? Rather than going for the cookie cutter model, let's say. You mentioned just before at the that when starting out in this space, you were one of the few, and now this sector, like the default curators and things like that, it's definitely getting more crowded. We
Hmm.
can really say that. That's for good reason. Uh, there's definitely a lot of traction. There's lots of interesting things going on. It's definitely hot. Why? Why is that in your view? Why is it seeing so much traction? Why has it been such a huge success?
Well, it's just growth, right? The size of the DeFi economy, the TVL was less than 100 million 6 years ago. Now it's in the hundreds of billions and is growing pretty rapidly. So it just went from 0 to 1. Now we're growing from 1 to 100 very slowly. So I would say I view it as a sign of the industry becoming a little bit more mature and tooling becoming more widely available, and institutions are becoming more and more accepting of this.
Yep.
So it's natural evolution, and it's great because if we're still playing in a very small pond with no one else or with very few players, like it was many years ago, then well, it just means the industry is dying, and it's the opposite.
That's a great perspective. You're basically saying you welcome competition in a way because it validates your thesis. It validates that you have product market fit, that there's traction for the services that you're offering, right? That there's a demand for it. Um, Looking forward a little bit, what do you think will be the next step? You already mentioned institutions are coming in. Um, how do you see this space evolving further?
It's a very tricky question because it's very hard to see the future, right? It's always very clear when you look back, but we view that there are kind of two paths that exist for the growth of DeFi as an industry. So one is the obvious one, right? Um, Circle is launching its own chain. Robinhood is doing its own chain with tokenized stocks. Stripe made a bunch of announcements with regards to the stablecoin business they're going into. Some banks announced they're doing their own stablecoins. So it's that institutional corporate growth. But I would argue also, as that as it matures, will resemble a lot more what traditional finance looks, and it will be less kind of DeFi in nature. And then the other door, so to speak, is through the crazy use cases, where the likes of Pump.Fun will be attracting quote unquote normal people to come into the space where someone is watching streams, and suddenly there is a crypto element associated with it. So we see this kind of corporate and social, corporate and consumer coming together, and we're trying to position ourselves to win in either scenario
Mm.
where there may be crazy, like Polymarket is a great example, right? They've been building for a very, very long time, just amazing, persistence. And they've clearly uncovered, a product market fit with, you know, it's not really something you would have easily anticipated if you were thinking, what will DeFi do, a few years down the line. But from a, crazy consumer social use case, makes a lot of sense. So these are the two avenues that I feel are in front of our industry, and obviously it will keep evolving through both of them. And then you just have to choose what resonates most with you as a builder, entrepreneur, individual, and you focus on that.
And it sounds like what you mentioned earlier, that your venture fund is focused on social and consumer, that you're kind of banking with the venture arm on that second door, let's say, and with the DeFi yield strategies on the former one about institutions and banks and capital
And the exactly,
element.
and the vaults and the liquid token fund. Yeah. So basically, these things are much more mature, right? So there is a set of existing products, strategies, and things that exist already, and they just need to grow by a million X. Whilst, what's the next pump to fund? What's the next bullet market? We've got no idea.
Yeah. But you're hedging your bets, it sounds like, in a good
Uh,
way.
exactly. Exactly.
Just exposure to both possibilities. And
Well, yeah, very interesting.
it would be super interesting. The one you just mentioned, I like to think of that one from time to time. I don't know if they're gonna pull it off, bump that fun, but it's definitely intuitively it makes sense. Um, if you've done a bit of gaming or you've been close to that, maybe through like younger family members or something like that. Like nowadays, it's huge. Everyone is watching professional gamers or streamers, Twitch,
Mm-hmm.
and you're already seeing them playing matches and things like that. The the step towards placing bets on that, for example, is a pretty straightforward leap to make, which is something we can definitely see playing out and could definitely make things a lot more exciting. Just today, I saw that in Korea, these trading competitions overtook esports as like the main online way of competition among the youth.
Mm-hmm.
So it resonates with people, and I can definitely see it playing out that way, and could be interesting future. Um, yeah, the default meta. Okay, so that's something we'll have to see how it plays out, right? Um, at least on your front, you are playing your own game. Let's say you recently launched the Re7 BTC yield strategy, which you mentioned earlier as well. Tell us a little bit more about that. What does it involve? Why did you introduce it? Uh, yeah.
Yeah, it's a good question. Obviously, Bitcoin and gold are very popular for a very clear reason, and they should be very popular for a very clear reason. The downside, however, is that they're not productive assets, and that's exactly why they have value. So, if you could make them productive through a variety of different investment strategies, then potentially you have an interesting product. So, we have seen the BTC as it's glamorously called,
Mm.
um, evolve from nothing to a small but a pretty vibrant ecosystem of things where you can deploy Bitcoin wrappers, obviously not Bitcoin itself, on chain, and you can do some pretty interesting things with it. So we were reluctant to jump into that on day one because again, we would rather be slow and careful when it comes to yield. But earlier this year, we saw, for example, what was happening on Starknet as an example of a chain that is very deep in the BTC world, where you can actually do native BTC staking, which is as close to a benchmark rate, so to speak, as you can have, and then an ability to have a whole kind of Bitcoin DeFi ecosystem around that. So that gave us confidence to go into an ecosystem where, from a smart contract risk side, things are as tight as they can be. So we're like, okay, that could be a good risk-adjusted rate of return. And then we were fortunate enough to bring on board someone who has decades of experience of doing option-related strategies on BTC as well. So we designed a strategy where you can benefit from very different worlds of being, DeFi specialists and then doing some stuff with options on the centralized venues, and then packaging it together into an asset that basically looks like a yield bearing instrument on BTC, and that has seen pretty positive reception, to put it mildly, since we announced it about a month ago, and is growing very nicely.
That's great to hear, and that does make sense. People love yields, and yeah, it's naturally appealing to people. I think who are these people in this specific case? Like, what are some of the allocators or the clients
Uh,
who are adopting?
the appeal of something like this is very, very broad, right? So anyone who is holding a coin and would like to get some yield, it could be large private investor, it could be a corporate entity that holds BTC, could be miners, could be pretty much anyone. And also, just like we have in the stablecoin world, we have a lot of yield bearing stablecoins that are in the background allocating somewhere else. Then here you can have something very, very similar, and it's happening already. So it has a very broad appeal. And then obviously nothing is risk free. There are always risks when you do any single investment strategy. So we have to make sure people understand what they're doing. But yeah, given that, then the interesting feature is that when it comes to, let's say, someone decides to run a venture fund and they're raising money, they have to sell investors not only on themselves but also on the strategy and why they're different from a venture fund in some other sector.
Mhm.
Right? There's a lot of competition. If you are offering your investors a dollar yield strategy, you're competing with treasuries to real estate and everything in between. But when you have a non-productive asset that has a zero opportunity cost, then people just need to understand the nuances of the specific strategy rather than look at what the hurdle rates might be because they're literally zero.
Okay, and I was thinking that BTC is considered the first choice for institutions coming into space, wanting to dip their toes into this crazy crypto thing. My thought, my expectation was that your answer was going to be along those lines, right? That this is a product that appeals to many of those more traditional, conventional, conservative, type players who cannot just run any kind of crazy crypto strategy or uh, deposit in any vault that they like. They probably have a mandate, and they start out with allocating towards BTC, and this can maybe be a natural extension of that. Um, is that, am I thinking along like lines that make sense there?
Yeah, absolutely. That's what I mentioned by family offices and corporates. So by corporates,
Um,
I kind of packaged it all together, but I meant asset management firms, miners, and any other type of institution that's holding a bunch of coins.
got it. And what you mentioned, the traction. Traction's been great so far. Can you share a little bit more about that, and where do you see this going ultimately? Hopefully.
Uh, well, very shortly since launching it, we've gotten to kind of nine-figure commitments for a strategy like that. pretty quickly. Obviously, it takes time to kind of to convert all of that, but it's been very, very positively received. And we have already started thinking like, what do we do when we hit capacity?
Okay, that sounds very good. That's kind of what you want to hear, right? Um, that's a good problem to have, let's say.
Correct.
Um, yeah, yeah. Okay, how are we gonna increase capacity? Awesome. Um, what else going on at Re7 Capital? Any other yield strategies coming up or other innovative products that you're launching?
Well, that's plenty as it is already. No,
You got
uh, jokes aside, there's a lot more that's happening on the vault side of things. You know, a lot more chains are now kind of working with us, as well as neobanks and fintechs that want to start offering DeFi yield products to their customers. So a lot of work is happening in the background around that. But yeah, to the outside world, it looks just like a linear evolution, whilst in reality, there's a big product push that's always in motion somewhere.
That's interesting. Definitely hearing more and more about like this neobank narrative. Can you, can you share your views on that? Like, why is that coming up right now at this point, and why is this seeing traction?
Well, stable coins are becoming more and more embedded all over the world across everything.
Yep,
And, you know, the next logical step is to offer some yield on a stable coin.
sure.
So
Yep.
that's just an inevitable thing. Um, and then on top of that, there's just a broader integration that's happening. So a great example is what Coinbase did with Morpho, right? Which is a lending protocol where if you are a customer of Coinbase, you can borrow against your crypto. You can borrow stable coins, and the source of lending, right? You borrow from chain, you borrow from DeFi. So there's this convergence of CeFi and DeFi that's happening already, and you know, neobanks and fintechs. There's just an extension of that.
Absolutely. It's very like also the cross-border payments, stable coins are seeing so much adoption and it has such a strong use case.
Hmm.
Just it's in a lot of ways. Um, right. Um, from a general to wrap it up as a more general question, what's the strategy for RE7 to keep engaging the market and keep expanding?
It's you know, I remember asking one of our early investors who's running a very very established TradFi firm, and I asked him, you know, how did you get to where you are today? You know, such a great firm, and you know, amazing business, amazing track record. And he said that, well, my edge is that I've been doing that for 30 years. And I want to make sure that every day my team is 1 basis point stronger than it was yesterday. So I wish there was a very, you know, sexy answer to that question, but the real just and example of last week is great, right? So you have to survive, right? So you have to keep showing up and just, you know, grinding every day, making incremental progress. And then there are these, you know, shocking events, and you have to make sure that you're the one who's coming out stronger than you were before, and you're capitalizing on these things. And if you just do that, that's 90% of success, right? Like there's this famous saying that 90% of success is just showing up.
Yep. Yeah, for sure. We did allude to that a little bit earlier in the show last weekend. It was a very interesting event that went down. I'm sure there are like lots of things that you cannot share about how you handle as the firm, right? As an
Mhm.
event like that. But maybe as far as you can share, maybe you can kind of walk us through how that goes because it's a Friday. People are maybe getting ready for the weekend, even though it's crypto. So it's like 24/7. Like what is a weekend even? But
Yeah.
still, right? Like it's a weird moment for these things to happen. Um, how does
Yeah.
something like that unfold?
Yeah.
What type of actions do you take? How do you capitalize? Things like that.
The reality is that, when things like this happen, there are two things, right? You need to make sure you're okay, and then you have to capitalize on that. So
Yeah.
capitalizing comes as a second step,
Right.
right? But the first step, it's like, by the time you see it, it's too late. Meaning that the way to manage your risk is before these things happen, not during, because it's just like, it's too late.
Yeah.
So um, we have taken a very first principles kind of approach where, back in the day, we thought through all the obvious things that can go wrong across the venues, the systems, the tooling, the industry, and so on and so forth. And then, step one is you make sure that most of what you do is isolated from those existential risks. Where, for example, in our long only fund, we have explicitly imposed a restriction on ourselves, even though no one asked for it, where we said we'll never take any leverage, just as a policy. So
Right.
then, when things happen where our assets are sitting with a custodian, they're sitting in just in buy and hold. And if we have spare cash, we'll just buy when things are being liquidated, right? So if you're running a long only fund that's levered up, well, maybe you'll get lucky, maybe you won't. So firstly, you need to avoid these things, and then secondly, if you have to use some specific venues for a specific reason, you need to make sure that you get the right tooling where you can think through all the scenarios, even if it's Friday night, and especially if it's Friday night, because it's always Friday night or Saturday night.
When these
That's
things happen. Yeah.
exactly. So we operate with an assumption that, you know, everything that can fail will fail.
Yeah.
There, you need to have systems, people, tools, and policies around that where upon the first sign of stress in the system, it's hands on deck and everyone is doing what they're supposed to be doing and you're managing what you need to be managing. But, you need to build those things way ahead of time. Otherwise, it's too hard. So through our systems, we've been able to spot these things just in the first second as they started unfolding, and came out, with a positive P&L rather than negative P&L on the back of that. But it all comes through thinking just, whatever can fail and blow up will eventually blow up. So you have to
Yep.
make sure this doesn't when it happens.
That makes a lot of sense. It's all in the preparation, right? And then the last piece, once that's covered, the capitalization and ending in a positive P&L. Can you tell us anything about that?
Well, at a very high level, events like this, they create a lot of spreads, right? Where same assets are priced very differently at different venues, or spot and perps are
Okay.
suddenly aging. So it's always stablecoin may depeg. Every event is a little bit different, but they're also the same, right? It's more or less the same things happen. It's just depending on what happens and how it happens.
Yep.
A great thing is the Athena stablecoin depegged on Binance. Well, I wouldn't even call it a depeg because it's not their fault in any shape or form, but traded below peg
You're
for a
right.
period. And it's like free money for those who can react because nothing negative happened on the Athena side. So there's always something that's happening. The indirect results of these stress events are always different, but the logic behind them is usually the same.
That makes a lot of sense. Okay. Thank you for sharing that insight. Um, Definitely interesting to hear how a firm like yours acts, in these type of stress events, as we call them. Mm, yeah, if people want to learn more, right, or want to work with you guys, where can they best find you and Re7 Capital?
Yeah, Re7 Capital is the website. Obviously, we have, Re7 Capital has a Twitter account. We have a blog, Re7 Labs .xyz, shows all of the vaults that we run. And feel free to reach out to us. We're always very open to new partnerships and any angle of growth opportunities.
That's amazing. I'm sure a lot of people will. Um, Thank you for sharing your insights. It was very interesting. We covered a lot from your early days, your background, to coming up with the idea and seeing the gap for something like RE7, um, being one of the first in that space and pioneering and slowly building out the offerings, including the BTC yield strategy and others. So yeah, it was an interesting conversation. Thanks for coming on.
Thank you for having me. It was a pleasure.
Absolutely. All right. Also, I want to thank everyone tuning in. It's always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And of course, you can tune in next time. We release a new episode every week, so follow us on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.
Thank you.